So you'll see like the Spark notes on it. So before you watch it, you can figure out, hey, is this relevant for what I'm looking to learn about? Cool, guys. Let's do just like a quick little 15-second round robin. Everyone can introduce themselves just so we all get familiar with one another. Michael, I'll let you take it away since you were here first.
Yeah, I was muted. What's up, guys? My name is Michael Bull. I got into land a little over a year ago. I was doing real estate before that, but single-family homes. We had like a small wholesaling business. Met Sumner, got into land. I think it's like a year ago, August, almost exactly a year.
Yep.
I live in San Diego with Sumner here, and yeah, about it.
Cool. Rylan, what about you, man?
What's going on, guys? I'm Rylan. I just graduated from Cal Poly as an undergrad, and I was studying engineering and graduated with my engineering degree. And then Sumner and I started working together about a year ago, I would say. And then just throughout school, I was doing a couple of deals here and there, and now I'm doing it full time since I graduated in June.
And you're coming up on a year too, is that right?
Yep.
Dude, so funny story, actually, way back in the day. And this is a testament to Rylan's hustle. Rylan used to cold call like people that own land for us. This was probably a year and a half ago. Maybe about a year and a half ago. And I think it was kind of the catalyst. We used to do those free meetings that you would attend, and then he started picking up the phone. We didn't get any traction, but you still shot your shot and talked to some grumpy landowners. And but you've been officially doing it for about a year, is that right?
Yeah.
Okay, cool. And then Cole, what about you, man? You want to give us a little rundown?
Yeah, absolutely. Just ever since I graduated high school in 2018, went into the trades, doing HVAC. Long story short, got out of that, started a wholesaling company, and I was in, I think you said Michael was also in Pace Morby's sub 2 program, because I did that after gave it a year, a little bit less than a year. I was just doing everything, door knocking, had a door knocker guy, hitting thousands of doors, just all these neighborhoods. I got into creative finance because I was like, wow, people don't want to take the low cash offer, yada, yada, yada. Had all the information, but the holdback for me was lead flow, qualified leads. I could talk the talk, all the terminology and all that stuff. But if you don't have enough qualified, motivated sellers to talk to, you're not going anywhere. So a year and a half of my life, got into the sub 2 program, ended up doing a portfolio deal of 5 houses I wholesaled, made $15,000. Nothing too crazy. I pretty much got out what I put into that business as far as cash, but I learned a lot, sharpened my sales skills, and I came to a fork in the road where I was trying to do that business and landscaping on the side. It was like 2-3 days a week. I would do curb appeal cleanups for flippers, real estate agents. And I was like, wow, my truck just broke down. Am I going to buy a new truck or get a new used truck and then also try to pump money into this wholesale business that's costing me thousands of dollars per month and not really providing much, because it was only that one deal in a whole year and a half. And I was working with real estate agents, sending them leads if they want to go retail. Just trying to monetize every single aspect of the business. And there was people around me that were doing well, but I wasn't. So I decided to pull the cord on that and just been doing landscaping for the past, 2 years full time. Got into native plantings, growing this business, decided I didn't want to scale it. I went out to some events, talking to some of the big guys that grew big corporations. I realized that wasn't for me as far as having a landscaping company with labor and all that other stuff, contractors licensing. So most of the time I'm working solo. A couple times a week, I'll call in 1 or 2 guys just to help me get ahead of schedule. But I'm a small operation here in Richmond, Virginia. And I just really need to meet, when Sumner, I saw your ads on Instagram, or maybe it wasn't even an ad. It was I just came across your profile. I saw it, I'm like, that's pretty cool. Hey, is land a good business? And you were talking about, digital marketing's a good business, but land's pretty good too. That one is the one I saw. And I was like, okay, cool. And then I was looking at Land Watch for land for myself. And I was like, and I was going to call some people because I really, I'm like, I would be one of the categories of people that you're trying to market to as a buyer, because I'm trying to escape the suburbs. I absolutely need to get out to the middle of nowhere. I want to have goats. I want raw milk. I want to grow my own potatoes. I want some eggs. But at the same time, I want to have the financial freedom that a business provides. And I even went out to do guerrilla marketing and just talk to people like that live in the middle of nowhere. I'm like, hey, what do you do? Oh, well, we don't have landscapers. So I'm starting this business so I can live in the middle of nowhere, maybe get Starlink internet or live closer to town at first. I want to have my own land. And then I also want to use the passion that I have for finding like this homestead land for myself and then use that for all these other people. And this can be the business that gets me there. So that's what I'm doing now. Really, really need to get out of the suburbs. I just love it out in the middle of nowhere. I was just in the backcountry of Washington. We were sleeping there for 4 nights. There was mountain lions and bears, and it was just great. So this is the, I guess, means to an end to get a business that is that I can do remotely over the computer, over the phone. That gives me some freedom because I started out with less freedom. Then I started my own company, and then I had more freedom. And then I did landscaping, and now I'm outside and I'm getting a suntan all day and I get to enjoy the weather, but also now I'm stuck in one spot. So I want to be able to be out of where, I guess where the grid is, where the people are, and just have some more freedom that way. So that's what I'm doing.
Love it, man. Goddamn. Got a lot of irons in the fire. It's definitely a good story. And I think probably one of the few people in this business that actually would truly benefit from the properties that you buy. Most folks are trading land. They never go look at the properties, let alone go live on the properties. You might be the one dude that actually goes and lives on one of the properties you buy. So there's a ton of carryover there, which I appreciate. I'm a bit of the same way. I mean, I definitely like some of the amenities of living in a city and like the social scene, but if I had it my way, I would live out in the sticks, sleep under the stars every night. I'm actually, when I go back to San Diego, I'm building out a van that'll be like my mobile land workstation, but I'm still going to keep a home base in San Diego. So love it, man. Thanks for giving the breakdown. Chris, what about you? Last, but certainly not least.
I'm Chris. I'm actually Michael's brother. And I was in residential real estate for a couple of years, and August 1st marked the first full year of business doing land full time. So had some I didn't love residential real estate because you could do your job to the T or go above and beyond, and you still wouldn't get paid sometimes because someone just decided their feelings, got in the way. So I was like, well, what can I do to put the same amount of effort in and I actually get money out? Luckily, Michael was generous enough to kind of teach me the ropes, and I met Sumner. Absolutely fascinated by it and been doing it. Yeah, it's full time for a little over a year, and August 1st marked the first full year in business, which is pretty fucking crazy.
That is crazy, dude. It's crazy that so many of you guys are having your 1-year anniversaries, which is kudos to everyone here.
Yeah, life-changing. So thank you guys.
Yeah. So what we're gonna do on these calls, there's gonna be weekly, reoccurring, same time, same place. If you guys ever miss any of the calls, they'll all be recorded. They'll be categorized within the program. And really, a lot of this is going to be Q&A focused, but just by nature of things, there's probably going to be some themes that keep on reoccurring in some of these meetings. So we'll categorize them based on the theme. So one might end up being Q&A on acquisitions. Next one might be Q&A on hiring, on and on and on. So you'll see that categorized within the program. This is evergreen, right? So you might see some of the same faces every meeting, might see new faces every meeting. You guys will have lifetime access. So if you guys ever have something that comes up, could be 2 years from now, like, oh shit, I have a question. I don't know the answer to it. Pop on here and we'll do our best to answer the questions that you guys bring to the table. So today's meeting, what we're going to do here is, since some of you guys are already rocking and rolling and in business, I think it'll be fun to do a little bit of a recap on how August went for you guys, what you guys are seeing. Cole, I know this is a little bit new for you, but what's going on in the real estate market and the land market as a whole? There's a massive inflection point that we're kind of gearing up towards, and things are changing. Can't really say it's for the better or for the worse yet, but things are shifting. And so I think kind of having a little bit of group think, putting our heads together, seeing what you guys are seeing, and kind of trading some stories from the battlegrounds of August, both in terms of acquisitions, dispositions, problems that might be arising, and then we can kind of roll into Q&A. And then Cole, you might have some questions in regard to any of the modules you've gone through in the program, so we can chime in on that. But to start, let's talk about August. Good month, bad month. How was it for you guys?
I guess I'll start since I started thinking.
Yeah.
August is actually a good month for us. So August, Well, I guess I'll start on the acquisition side. I think things picked up a little bit because the prior month things were really, really tight. We weren't seeing anything. August we I think we put like 6 under contract. I think 2 or 3 fell out. But I saw a little bit more deals coming in, where the month before I had like nothing come in. So and then on the contrary, on the sell side, I think things were like even tighter. So we were getting a little bit more deals on the buy side, but it was a little bit tougher on the sell side, a little bit less leads.
Mhm.
We still sold a few deals, but we sold them like significantly cheaper than I would have liked to have or typically would have. So, and I think part of that is just like me. It could be me in my own head, like, oh, I'm freaked out at what the market's going to be, so I'm just going to like get rid of this deal way cheaper than I normally would have. You know, it may have sold had I left it for another 30 days. But nonetheless, we still sold a few deals a little bit under market, which is not the end.
Wait, how many deals did you guys sell last month?
We closed on 3, like actually received the closing funds on 3, and then put 3 under contract, if I'm not mistaken. I'm not looking at it. I think that's about right.
Okay, cool. And then so that the 3 that you guys reduced the price on, was that A, because you guys had lower offers coming in and you said, shit, let's take one of them, or B, was it because you needed to make room for new inventory?
A little bit of both. Like one of them was out in like Crestone, and I had held it for like 90 days. I got 0 leads on it. So the first person that reached out, I was just like super apt to sell it. They lowballed me and I accepted it. Another one, it was a pretty big purchase price. We were actually getting quite a few leads, but nothing was really converting. So somebody kind of lowballed me and we went with it. Oddly enough, once we sold it, I ended up having like 4 realtors reach out like 2 days later. So I probably would have sold it at market price. But I think a little bit of both. Like I just wanted to free up some capital, and there's like the concern of, you know, of what the market's doing right now. So you just kind of want to get rid of them. Like I have one out in Oregon right now that we bought for $33,000, and I've lowered it, I think, 3 times. It's only been on for like 40 days, but I've lowered it 3 times already. I normally wouldn't do that, but just because, you know, I don't want so much capital just sitting in one deal. I'd like to sell that sooner or later.
What's it listed at right now?
It started at 105. It's down to 87.5.
Okay.
And I think with a deal like that, like lowering it anymore, I don't think helps, because now I'm the lowest one in the area. So it's just waiting for a buyer to come through, you know, and hopefully choose my lot. But I don't think lowering it to like 80, for example, helps when I'm already the lowest one. You know what I mean?
Yeah. That's what we talk about in the program. It's being the next logical sale in every market. But there's a tipping point where you could just take it too far, right?
Right.
So all in all, it seems like it was a good month, though, no?
All in all, was really good. What really hurt, well, I haven't felt it yet, but our mailing was super poor. I was sick for 2 weeks. I was out of town for a week. I know they're just like excuses, but I will feel that in like 2 weeks, not having mail out for like the whole month, basically. Yeah.
And what'd you hit for mail for the total for the month?
No, actually, I haven't done my KPIs yet. I would imagine it's just a few thousand. I should be hitting 10,000 a month. If I went back, I would imagine it's like 3.
Okay.
Yeah. So pretty bad.
All right, Rylan, I hope you've got your KPIs figured out. Give me a rundown. How was last month?
So over the last like 3 months, I've sold everything I had because I was in school trying to finish up school and get all my finals done. So I wasn't putting out as much mail as I should have been. So I was just working with all those properties that I had left, like a couple in Costia. So I sold off those in July. And then ever since, I've just been buckling down on the mail. I sent 15,000 letters last month. So right now I'm just like dealing with the wave of letters back right now. So it's just like I'm analyzing everything and then trying to call realtors every day, trying to see what they think on them.
Yeah.
But it's like a big mixture of small deals, like around 20 to 30 grand, and then your bigger ones. But right now I have 6 under contract, and everything's just scattered, like West Virginia, North Carolina, Tennessee. So nowhere like specific. I'm just trying to stay scattered at this point so I can have as many eggs as many baskets as I can.
I think that's wise right now for certain. It definitely, I mean, what I'm seeing too is like the slowdowns are hyper specific. We have some markets that are still just absolutely chugging along, and some that have come to an absolute screeching halt. So I think now is I mean, it's always a good time to be diversified, but now in particular, it's pretty wise to be scattered. And we'll touch on that in this call too, just some of the things that we're doing in our business to make sure that we're playing it safe. In terms of sales, how many sales did you guys drop last month, Rylan?
That was 2.
2. Okay. All right, Chris, let me hear it. Where are you at, baby?
Hey, okay. So my business model is a little bit different. I have less just velocity in general. Like I don't do pretty much. I won't buy anything under a certain price. So my deals are a little bit bigger. I just have less of them, but their spreads are pretty good. So I didn't have actually anything technically close last month, but I had 4 that I put under contract to close, in the next coming days. So yeah, they it was an okay on the buy side, on the acquisition side. It didn't seem like it increased really at all from. I was kind of using that. I thought initially that would be a good gauge, kind of like where the fear was in the market. I felt if I got a massive influx, right? If I send out 10,000 pieces of mail and I got 30 deals or whatever it may be, way more than I would usually get, then I would be like, all right, people are panicking, and that would be a good gauge. But on the acquisition side, the deal percentage is about the same as it's always been.
Mm-hmm.
I got 1 killer deal, but other than that, pretty standard. And then I just have a lot that are sitting there for a little bit longer than I was used to. I think I was laughing with you, Sumner, for a while because I was lucky enough for the first 10 months of my business. Sitting on the market for a week was like a long time.
It was nuts.
And so Michael had to talk me off a ledge like a few times, so I'd call him and be like, "Yo, this has been sitting on for 9 days. Like I think I'm gonna lose money." He's like, shut up. So I've kind of like taken a deep breath, and it's totally fine with me to have some active listings. There's a few, like Michael said about his property. Mine are the cheapest in whatever area it is. I lowered it to get there. The spread is great on them. I don't need to lower them any further. If there's something's going to go in that area, mine will be the first one. It just hasn't, and so it sat there for a while. But it's fine. Kind of what I expected, and bracing for the slowdown. I'm hoping it's not going to be too bad, but that's kind of what I'm expecting, and that's
Yeah, I mean, it's all you can really do. It's definitely, no one's got a crystal ball here. One of the things that 2 variables that we're looking at in our business pretty closely, just to kind of gauge where things are at. Our overall response rate and acceptance rate is about the same for our campaigns currently. If shit really hits the fan, that could shift. But what we are seeing an uptick on are previous sellers reaching out, now accepting our offers, which is fascinating. Sellers that declined our offer 90 days ago, 120 days ago, are now coming back to us. And either accepting the offer that we gave them that they initially denied, or coming back and accepting a lower offer than what we had initially spoken about, which I do find is interesting. Sample size is still small, still less than 5 people, but I mean, we have thousands of seller leads in our system, so it's natural that some of that stuff might happen. If you guys don't have as big of a base, you might not be seeing any of that, but I wouldn't be surprised if a few kind of creep back in. I also think it's a wise time to be following up with previous leads. The other thing that we're looking at too, since we have a note portfolio, we're just looking at default rates. Our default rates haven't really shifted yet, but it is something that we're actively monitoring. From what I understand from the people that I've connected with that have been in the game for a decade plus, or way longer than that, even in some cases that have gone through 08, the first thing to deteriorate in your business is the note portfolio. Good deals still sell. Like if you're buying quality deals in markets where there's still demand and you're pricing them correctly, those deals still sell. But folks that are on your kind of roster of people that are financing deals, those could wither away, especially if they're A, lower quality deals, and B, if they just recently started financing. If someone's 40 months into a financing agreement, maybe they don't default. But if someone just signed up 4 months ago, they made very few payments, those are the ones that typically we see fall off. But again, our default rate hasn't really shifted much. So I'll go through our numbers. One of the things that just a word to the wise for you guys, because I've tried both ways. I highly recommend tracking your KPIs and doing it diligently. In fact, we actually have a KPI template inside the program. I would just kind of mirror what we do in terms of tracking KPIs. We try to find, hey, these are the variables that are important to track, and then kind of leave everything else by the wayside. But I think it's really important to make sure that you guys have numbers that are accurate. We update them every Friday, but you could do it monthly if you need to. So in August, we sold 18 properties, a total value of $399,640. We added $1,700 in new monthly recurring revenue. So that's like new owner financing revenue that comes in every month. Our owner financing revenue was a little bit down last month. I think we were at 22,000 or so for owner finance income. We're usually closer to like 25. So we had some people that were late, that are still late, that haven't paid yet. So it was a little bit of a downtick than what we saw in July. I think July we're at about 25. Out of that, roughly 400,000 in deals, our net profit from those cash sales was $124,576.17. So all in all, with the owner financing and with the cash sales, we're at about 146,000 or so for the month in terms of like net. And then total finance value for the properties that we did sell in owner financing terms. So like that 1,700 roughly translates to $73,000 in total finance value that we'll capture over however many years. Those notes are all a little bit different. Our average note length is 3.5 to 5 years, somewhere in that range. We purchased 12 properties, and total acquisition cost last month was $353,528.50. We're pretty much, typically most months we're on balance for how much we're selling versus how much we're buying. A little bit skewed last month. This was actually our biggest total sales month. Wasn't our highest revenue month, but was our biggest total sales month just in terms of how many properties we sold. July for our total kind of like net amount was actually higher, factoring in our cash sales and our owner finance income. I think July we were at like 155,000. So far this year, just to kind of give you guys some perspective of like what our balance is. This year we've sold 107. I find this pretty interesting. We've sold 107 and we've bought 106. So we're pretty much always on balance. This one was a little bit skewed this month. And we've seen definitely in the last 2 weeks, we've seen a bit of a downtick in terms of lead flow, in terms of sales. Things have kind of petered out a little bit. Total leads last month from paid traffic was about 140. And then about another 100 that just came in organically through the website. And then unfortunately, I don't actually have this in our KPI sheet. We get a ton of inbound calls every month. So it's probably about another 100 or so. And yeah, it's not actually something we track in our KPI sheet. Our mail was a little bit down last month. We were just a hair over 11,000 pieces of mail last month, but we've introduced a new texting strategy in our business. We used to do mail, then text. Now we're doing text, then mail. So it's actually decreased our spend on mail. But as you guys could tell, our acquisitions were absolutely booming last month. And we've seen a pretty big uptick just in terms of people being added to our CRM and new offers being accepted by doing the text, then mail. That's something that we're going to cover in depth in the program. It's still something we're kind of fleshing out in our business. So I don't have it down to a perfect science yet, but it is a pretty fascinating strategy. And it's definitely reduced our mail cost and then also just increased our acquisitions yield in total. So just kind of like what I mentioned before, what we're seeing out there is some markets are still absolutely roaring, rocking and rolling, and I have very little fear to do deals in those markets. We're definitely getting more conservative with what we're buying. We're still buying a lot of deals that I might have done 6 months ago. For us, a couple things we're looking at. One, I don't really want to be doing base hits. I want to be doing deals that are above a base hit. So deals where there's a good amount of margin built in, deals that we might be selling for a 2x, 3x multiple. The other thing that we're looking at too is like if I'm going out there and I'm seeing, hey, the comps in June and May and April, they were all selling at 100K. I'm applying like a 20% discount to that. So I'm saying I'm probably going to sell mine closer to 80. And that's way exaggerated. I don't think the real estate market has corrected 20% in the last few months. But again, I want that margin of safety. So we're really underwriting our deals pretty conservatively. For like the small, cheaper properties, not a whole lot has changed there. If you're offering flexible terms, you're offering appealing terms, you're still going to find buyers for them. But really this applies to the properties where we're sinking, $20, $40, $50, $60,000 into the purchase of that property. We want to be extra cautious. We had one interesting situation last month, which is kind of like the canary in the coal mine for us. We've got a few deals out in Maricopa. That's an area, that's a county in general, and an area that did not fare very well during 2008. And so it's something that we are looking at. It's like what markets did well in 2008, what markets got obliterated. That could happen again. Who knows? And what we saw is we had a deal that went under contract in Maricopa. wasn't a great deal. I think we bought it for like 44 and we sold it at 80. So it wasn't a huge return, but a pretty nice total cash influx that we get in the back end. And they had, oddly enough, gotten a $1.2 million hard money loan, which is crazy because they were going to use that to build a house on top of it. Everything was fine and dandy. And then like 3 days before closing, the hard money lender actually pulled out because they wouldn't underwrite the deal. Just because they're a little scared about new construction in that market. Unfortunately, we own 3 other properties in that same subdivision. So, I think there's some areas like that are definitely going to get hit. I think for us, like the rural recreational stuff, it doesn't change a whole lot. Again, I have limited perspective here. I haven't been in the game for 20 years, but it seems like demand doesn't really rip and roar and it doesn't dip too much. But like infill, rural infill, things like that, I think could be impacted just because ultimately new home sales are going to be way, way down. And in fact, a lot of new home builders aren't even building right now. They're just going to put a pause across the board on everything. So that kind of stuff, and that's not even really what our business is founded around. But again, like I would be gun shy on deals like that unless it's an absolute no brainer. So really for me, like there's no deal I wouldn't do if the math still pencils. I was talking to Rylan about this yesterday, but in my opinion, the next 12 to 36 months, huge wealth creation period. You might have to restructure timelines. You might have to restructure maybe some of the capital that you're using to buy these deals and like what the expectations are there. But in a market like this, I think it's a time where acquisitions really can rip and roar as long as you're buying the right things. And then you have the kind of correct timelines. So deals might not be dropping in 9 days like Chris experienced or even less, right? But there could still be some absolute home runs out there. Just your timelines might get a little bit extended. So it's not a time where I'm trying to back off. It's just a time where I'm trying to look at things a little bit closer and be a little more mindful about what we're buying. We're coming off the heels of 2.5, 3 years where things were just insane for land. Land is one of those things that really it's steady Eddie, doesn't get a huge rip up. It doesn't get a huge rip down, but that was kind of the exception was COVID. And so naturally things are kind of regress and pull back a little bit. So that's the lowdown on how the month was for us. All in all, a good month. September, we're kind of targeting a little bit of the same. I think our dispositions, so our sales are going to be down a little bit. It's been pretty soft so far, just the last week. Moving into this month, what we're doing is kind of like what you had to do last month, Michael, is we're moving out some stale inventory. It's not because we're getting a ton of low offers on it, but it's one, we need to make room for new acquisitions just because we've got like a pipeline that's ballooning. And there's just some stuff that I'm a little bit scared to hold any longer, right? And so a lot of these deals we're still making a decent return, but they're not slam dunk. So a deal that we were buying for 20 and selling for 40, maybe we'll take 32 or 35 for it, right? Just want to get that out of inventory, have a stockpile of cash just in reserve, so I have some dry powder, and then also make some room for some new purchases that we've got in the pipeline. The other thing too that you guys can do is anything that you have in title right now, you guys can push out close dates. If you guys want to extend those timelines, you can pre-market deals, get a read on things. I think it's bad business to just go around canceling contracts, but you also want to be wise about it. And so you can extend closings if you need to. And for us, what we teach, what we do in our business is pre-marketing, right? The best case scenario is you get a signed contract before you close on the property, right? So that's something that you guys can be doing as well. And for the most part, sellers have no qualms with it. So that's a lowdown on what we're seeing out there. Let's do a little Q&A here. If you guys have any questions, whether they're acute and it's something that you're experiencing right now, or there might be just from kind of a broader perspective, happy to go through those with you guys.
Yeah, Sumner, you said you had 140 leads from inbound paid leads, and then you said about 100 website leads. Out of the 140, do you have a breakdown of where those are coming from?
So one thing that we're not tracking in our KPI sheet, which we should be honestly at this point, just because we've gone so heavy on it, are MLS leads. So I would reckon the quantity is lower. It's probably another 50 or so MLS leads, but the MLS leads also make up a bulk of the inbound calls we get. So I could pull that from our CRM, but that's the one thing we don't have in this kind of master list right now. But to give you the breakdown, so last month was 108 land.com leads and 24 land flip leads.
And how many listings do you have on land.com right now?
25. Okay. Actually, 25.
And they're all full.
They're all full. Yeah, everything's maxed out. So we never have that's like, as you grow in this business, you realize that the worst thing that you can ever do is not have inventory, right? So we'll never be in a place where we don't have every single listing maximized, especially because that's a hard cost that I have to pay every month. So it's like, I need to be making sure that I'm getting my money's worth out of that expense. So yeah, I mean, just to give you perspective too, like land flip, it's a good metric to track just in terms of like overall demand in the market. So July was 120, so a little bit higher. June was 105. May was 71, and April was 62. So it's still, I mean, it's still booming. And what we found too previously is like this kind of area is usually a good time for selling land. Tail end of summer, intro to fall, things are usually pretty hot, but we're still seeing a decent amount of demand.
Sorry, what did your land.com compare to?
Yeah, so we were 108 land.com leads in August, 120 in July, 105 in June, 71 in May, 62 in April. Yeah.
So you're getting like on average like 4 per listing per month.
Yeah, I wish it broke down that cleanly. It really doesn't. It's like
I know. Some get are super hot, some are pretty cold.
For sure. Okay. It's like category economics where it's like 5 of them are driving all the leads and the rest get a few trickling in. But yeah. And for us, like our turn times are still about the same. Like we're seeing like 45 days or so to move most deals. So that hasn't shifted a lot either. So that's a good metric to be tracking as well as just what your days on market are.
45 days on market or 45 days to actual closing on the sell side?
Yeah, so we do 45 days from being listed. So we pre-market. So typically once we get the title commitment, we'll go and actually list that property. We want to make sure that everything checks out before we list it. And we'll always, when we list something as a pre-marketing, we'll always disclose, hey, this is pre-marketing, like you can't buy it yet, yada, yada, yada. But yeah, 45 days from it being listed. Now the actual like cash in, cash out, that's not something that we have tracked, but it obviously is going to be a bit less than that.
Yeah, of course. Okay, and then you said, what was the difference between land flip and land.com leads? How did they compare?
Yeah, so it's a little bit tricky because we actually downgraded our land flip account. When was that? Like March or something like that. So since we've downgraded, it stayed pretty constant. So it's 24 in August, 22 in July, 16 in June, 27 in May, 30 in April. For us, land flip used to perform it still performs okay for cheaper properties, but ultimately for the higher ticket stuff, it just doesn't seem to convert very well. But what we get from all these platforms, and land flip being one of them, we get a ton of folks that will just go and find our website and they'll start perusing. They might not fill out a lead form and then they'll just go buy a property from our website. So that happened. We get a few of those every month. So it's hard to fully flesh out what the actual like conversion is.
No, of course.
Well, what we see with land flip is it's a lot of those folks that are late night shopping, want to go buy a cheap property, come to our website and just buy one. But like we pretty much never sell any expensive stuff through land flip. And that's why we actually downgraded our account, is because as we started going up market and working on better properties, it just didn't really make sense to have that cost.
What price point do you see it starts to drop off for land flip?
Yeah, so we're at the mid tier, so it's 150 a month, and that seems to be a sweet spot. You could do 99 a month, but for us, the disparity between 99 to 150 was gargantuan, so it's worth paying the extra, $51 to get that extra influx. Now we were at the 300 a month, so now you're doubling your spend, and we weren't seeing a monumental increase for converting the higher ticket stuff, which is most of our inventory now. So for
what is a higher ticket, or what's a higher ticket price point for your inventory? Like, what did you not see performing well on land flip?
Yeah, I mean, pretty much for what we've seen is the stuff on land flip pretty much has to have really low owner financing terms. So it can almost be regardless of price, as long as there's a low down payment and a low monthly payment. We got a ton of like impulse shoppers on there, so people that just wanted to buy a piece of land, they've never seen it, they're probably never going to see it, they just want to go buy it. But like the higher ticket stuff, we weren't seeing much. But just to give you perspective, when we were spending 300 a month on there, it was pretty much doubling our lead flow. So like 57 leads, 52, 39, 30, things like that was more consistent when we were on that premium plan. Now, again, it's not a monumental expense. I'm sure you could justify spending the extra $150. But we said, you know what, that $150, we could get a better return if we dedicate that to more paid traffic on land.com or MLS listings. So I think it's just an argument for where can you get the best return. And especially if you guys are starting out, you've got a smaller budget to work on in terms of marketing and paid traffic, go to the places that have the outsized returns. And still to this day, it's going to be land.com.
Yeah.
You can't beat it. And then the MLS is going to be second tier, pretty close to it though. But again, the MLS only applies to some properties, right? You're not going to go list your $7,500 cheapo lot on the MLS. But the higher ticket stuff, it makes a lot of sense for.
What's the situation with the funding company that we were talking about probably about a month ago? Is that in action for the students? Like after we go through the course, we get some good deals working with the funding company and doing some sort of JV split with them. Yeah.
So that's ready to go. Just once you guys go through the course, I think everyone but Chris is using them right now. Yeah, you guys will have access to them. We'll loop you in. So once you complete the course, we'll make the introduction with you guys. One thing to note, just what like Michael is seeing right now is because they're also investors themselves, they're going to underwrite every deal that you send to them, which is really a godsend, right? Like when you're first starting out, you want to get a second pair of eyes on things. With that being said, though, they're also just getting a little more conservative with what quality of deal they want to go after, which is a win-win for everyone involved. But like a deal where you might have sent them 6 months ago that was a buy for 10, sell for 20, they would be all over it. They would do it without question. Now they might want to see a buy for 10, buy for or sell for 30 type situation. So you just want to be mindful, like just being at kind of the market cycle we're in right now, they might turn away more deals than what you might have seen just a few months ago. But again, still like it's a really worthwhile kind of resource to have in your back pocket. And if you get a slam dunk deal, pretty much irregardless of price point, they will fund it. So they're not going to put limitations on you like, oh, sorry, Cole, you're new, we can only do this much. No, they'll still fund the deal. It just has to pencil really well.
Sure. Okay. That makes sense.
Yeah.
What are you guys seeing about West Virginia? I'm in Richmond, Virginia. West Virginia, that's kind of my playground if I'm doing some local hiking. Is most of the stuff that you guys are flipping, is it near Charleston, Morgantown, like outside of there, or is it like the mid part of the state where all the big mountains are, Seneca Rocks, Dolly Sides, like the part where if you go on like those websites that show you like where the lights are, pretty much where the populations are, like that whole middle part of the state's empty.
Yeah. Well, I can't speak for everyone. I don't know if everyone wants to disclose their honey holes, but I'll tell you where I'm working. So what I've seen out in West Virginia is we're still doing deals out there. We're still selling deals. It's been pretty steady Eddie for us. For us, pretty much anything close to Morgantown has been doing pretty well. Hampshire County has been good. What's the other one? Hold on, I'll pull it up in my list here real quick. Mineral County. So those counties have been pretty good to us. To be honest, I think I've done less than 5 deals in West Virginia. So I don't have a ton of data to reference. But we just sold a deal there less than a month ago. West Virginia has still been good to us. What we see out there too is like people actually prefer the super rural stuff. So the stuff in the towns I've never bought, but I've never really seen much demand for it. It seems like the larger acreage stuff, an hour to 3 hours outside of like a more major town, seems to still be faring pretty well. And ultimately, like one of the things that I look at too is like, is it quality land, right? Like if you're buying a 40 acre in Mojave County in the desert with no real intrinsic value, it's a crap property 10 years ago. It's a crap property today, right? But today it's like you would want to be extra mindful of it. You're buying a beautiful, wooded lot with hardwoods that hasn't been timbered in 30, 40 years in West Virginia or really anywhere that's got, a running stream through it and yada, yada, yada. Like those properties were good a long time ago. They're still good today, right? And so I think if you're buying quality land, irregardless of where the market is, and it's got real intrinsic value, it's hard to go wrong as long as you're just pricing it accordingly, right? Yeah. And the thing is too, is like in a downturn, you have more motivation on the seller side, right? So it's like you can get better deals. You can get more deals being accepted. You can get more people reaching out. And as long as you're underwriting the deals correctly, you can still make deals work. It's not like it just shuts down entirely, right? And so you just want to make sure that if you're looking at comps from 2021 or comps from early 2022, you want to be mindful that the market might be different now, right? And so if you're underwriting your sales price correctly, I'd say still do the deals, still buy the deals. You just want to make sure that you're kind of accurately looking at what you might be able to sell it for. I think that's the one trap people could get caught up on, because we're using a lot of data that's backwards looking, right? We're using old data. It's very rare that we're able to figure out, hey, this just sold a week ago, right? We typically just don't have enough data to reference that's recent. So we have to go back in time. And usually that's fine when the market's trending in the right direction. But in a time like this, it's like, well, 6 months could really make a huge difference, right? And so that's just one thing I want to really impart on all you guys, is like, just make sure that when you're underwriting these deals, now is probably a time to actually look at what's on market, right? Like, typically we look at comps and we'll quickly glance at what's listed, but now is a wise time to say, hey, what's listed? And what we do typically, even if the market cycle is not where it's at currently, we'll still apply a discount rate to what's listed, because we know most people don't know how to list land, right? They don't know how to price it. They don't know how to list it. But we might, instead of tacking on our typical 10, 15, 20% discount rate, we might increase that even more for stuff that's listed. Now, stuff that's sold, I'm still going to price a discount on that as well, just depending on how old it is. But for us, we're paying a lot of attention to what just got listed, what's that new inventory being listed at. And for us, like, this has been such a good indicator for the longest time, and I don't see it ever changing. I hate Zillow, but the one thing it gives you is it gives you engagement. So if I can go look at a property that was listed 2 days ago and it's got 12 views and no saves, I think they priced it wrong. But if I can go look at a listing that was listed 3 days ago, 2 days ago, and it's got 400 views and 50 saves, like, the pricing is right and the area is right. People want land here. And so that's always a really good real-time pulse that you can use.
I get so frustrated when my properties do really well on Zillow like that and no leads come in. God damn it. What?
Yeah. We have this monster property that we just listed at like 179,000, and it's been up for like a few days, and it's got like a boatload of views, a boatload of saves, and we've had 2 calls. I'm like, dude, what the hell? But it all takes care of itself. It just takes time.
Yeah, for sure. Yeah.
But it is a little confusing. I'm like, did we put the wrong number on the listing? Are they calling the wrong person? Like, what is this?
Totally. And I get addicted to like refreshing Zillow like every day to see how many more saves. I'm like, motherfucker, how's one person not calling me? Come on.
I would like to say that I don't still suffer from that, but I still very much do.
Yeah,
I still check all the stats.
Any
additional questions, guys?
Yeah. When you're doing your pre-listings and somebody wants to buy the property, do you ever do a purchase agreement before you closed on it? Can you do that?
Yeah. So, I mean, a couple of things. We've done a whole slew of different situations here. We're a little more conservative with it now. We had some scenarios that ended up backfiring because we didn't close on the deal for whatever reason, and we had to refund the people, and it's always been fine. It's just a process I don't like going through. It's awkward, it's uncomfortable, and it's kind of a waste of time and resources. So for us, what we'll do is we'll accept a holding deposit. So you can go and place the holding deposit on the property. And we're always disclosing the listing. And then when they talk to one of our sales members, they'll always disclose, hey, property's in title. We can send them a title commitment. We can show them the purchase agreement. So just give them proof, hey, it is in title. This is what we're looking at. Because what we do for our holding deposits, so we do a 5 business day holding deposit. Now, obviously, that's not going to apply to if the property's in closing. So what we'll do in that situation is we'll say, hey, when the property closes, then you have 5 business days. But if you want to reserve it now, we won't stop you. We won't draft the purchase agreement until it closes, though, right? So we won't actually go under contract or anything like that until we hold title. But they can still reserve it, if you will, by placing the holding deposit. And it's just a sign of good faith, right? The only thing that we do different there is if it hasn't closed yet, then we'll say once it closes, then you've got 5 business days. And that's really to get their funding in order, maybe do some minor due diligence, things like that. So yeah, that's what we do.
To touch on that, I do sign purchase agreements before I've closed on it.
I do as well.
Yeah, it may not necessarily be like the best thing to do, but I still disclose to them that what's happening. Like, I'm waiting on it to close. So
yeah,
they still know, but I do sign purchase agreements. Sometimes people don't fully understand. Like, even if I tell them that, oh yeah, we're in escrow to buy it, once it closes, we'll send it off to escrow. Sometimes they still don't really understand. So like, if on the contract it says, earnest money is deposited in 3 days, they don't understand why the title company's not reaching out to them like that next day to send it in. So yeah, it can get a little messy sometimes, but Yeah, I just try and be as clear as possible. But I do send purchase agreements before we've closed on it, and I haven't had an issue with it yet.
Yeah, I do the same thing as Michael. I actually intentionally put off the earnest money deposit until I actually own it. So if it's set to close on, let's say, the 20th of this month, and the purchase agreement usually says 3 to 5 days, the earnest money, I'll just actually put a date on there like it's due on the 24th so that I'll actually have owned the property by then. And it's with an escrow company that I have a good relationship with, because anything I do in Arizona, I use the same one. Anything I do in Colorado, I use the same one. So they kind of just work with me. And so that I have done it many times. And the best is when you have a buyer who kind of buys a lot of them. I had one for a while, bought 8 of my lots. And every time I put something in a contract to buy, I'd send him a contract to sell it to him. And I'd send both contracts in, and they just close at different times.
Yeah. So so one note on this. I think I look at everything in terms of like cost, benefit, risk, reward, right? I think typically the reward, there is no reward for going under contract until you've closed on it, unless you're in a state where you can double close without them disclosing the price to the new buyer. So like in California, for example, if you double close, they're going to say, hey, that's fine and dandy, we'll double close for you. But hey, new buyer, just to let you know, they're buying it for X and selling it for Y. Some people will gripe about that. Some people don't. What I find is we just don't double close in most situations, unless we can in that state. We'll just kind of tee up the closing to be really close to one another. For us, get the holding deposit. And then if we go under contract, there is just a slight risk, if you will, that there's a rebuttal to the fact if you didn't close on the property, they're under contract on the property. How do you settle that? Most people are going to be totally fine with it, but like you do open yourself up to a slight potential of litigation, I think, in some situations. Very, very unlikely. And if there's trust and rapport there, then fine. But I think in most cases, again, as you start like interfacing with tons of customers and people are buying tons of properties from you, you want to make sure it's streamlined, it's really simple, and you just like open yourself up to the least amount of risk. And if they've already put money down, typically they're not going to change their mind, right? So we do money and then no contract. And I'm sure even money could open you up to some level of litigation. I don't know. But we'd always refund them if anything happened. But if you can double close in that state, or you're fine disclosing the price to that buyer, then get the contract and send it in, because that way you can have your capital out for the least amount of time. And that's fantastic. But for us, it's like in most cases, we don't double close. So it closes on our end. That same day, we'll go send them the purchase agreement. They'll sign it. We'll send it to title that day. So there's not really much of a lag time there.
Last thing on that, I don't double close on mine. I get the purchase agreement signed. Christopher will double close. I think a lot of times I just get it signed. I wait till it closes before we send the new one in, because we have run into the issue where we had to tell the buyer or the new buyer, we're buying it for X, selling it for Y. So for that reason, we don't double close. We still sign the purchase agreement. We wait till it's closed before we send the new one in. But I think Sumner's probably right with getting a holding deposit if they have like some equitable interest in the property or financial interest in the property, then that's probably just as good, if not better, than a signed purchase agreement.
Yeah, I think it's an equal sign of good faith. And the funny thing is, people sign purchase agreements all the time and back out of them, and we would never try to like press it on them and make them perform. But usually, money I've found is a better indicator of motivation and interest. But again, like there's very little risk involved there. I just think as you scale up and you're doing dozens or hundreds of deals annually, you just want to make sure that if you got one, Susan or Karen, what do they call them, Karen? If you got one Karen that came and caused problems, it's like I would rather just play it real safe. But again, the catch-22 there is you got to have a website set up where they can actually go and purchase the property, which I know not everyone here does have a website. I'm pro website. Some people aren't. I don't think it's something that you need off the jump, but I think eventually there's a ton of downstream benefits to having that website. And one of them is they can go and purchase it there, place a holding deposit. You can always send them a link to do it outside of the website. I've found that there's way more concern. People are just like, why are you sending me this link? Opposed to the legitimacy of going to a website, placing that holding deposit, and it reduces your involvement. Then you don't have to do it yourself. Any additional?
One last thing on that. Do you have to tell the seller that you're listing it anywhere? Is there any legality issues with pre-listings?
Yeah, consult your attorney. No, I mean, it is a good question. From what I understand, is it ranges state by state. Like, I know people, for example, in North Carolina that will take a purchase agreement and then somehow also list it on the MLS. They don't even hold title. So it's definitely a state specific issue. Like everything in real estate, it's always a local issue. It's always a state issue. We've had dozens or maybe a dozen sellers come to us and say, "Oh my God, I saw that you listed the property." It's never been a problem. In 99.999% of the situations, they know exactly why we're buying the property, and we will be forthright with them. What we know is most folks aren't going to go and shop our website for land and go check. But we have had it come up, and it's never blown up a deal or caused any issues. The folks that are typically selling to us, they know that they're taking a discount. They know they could go get more for the property, and they're totally fine with it. And they also know that we're a business. We're not just like some random guy who wants to go live on the land. And so there's usually a ton of awareness around it. But no, I don't have them sign anything. I don't reach out to them and let them know beforehand. But it's really never been an issue for us. Now, there are some exceptions, though. Like there are some deals that are, the numbers are so obscene where I'm like, there is a world where maybe they go and find the listing, but it's incredibly unlikely. But the numbers are so ridiculous. I'm like, I don't want to do that. I don't want to jeopardize the deal. You're buying a deal for $20,000, selling it for $150,000. It's like, yeah, let's play it safe. I can wait a couple of weeks before I list this. So in situations like that, I'll be mindful of it. Or if they live next to the property, right? Like because once you start listing, people are going to start visiting the property. So things like that. If there's just some oddball situation that falls out of the norm, then I will wait. We've got 2 properties right now that are kind of fall into that category of being obscene, where I'm like, yeah, we're going to wait until those close before we list them. Or if I suspect that there could be any title issues, that's a situation where I will wait. So I'll always wait until I get the title commitment. If there's any problems there, we'll remedy it before we go and list it. We had one terrible situation that, you always in your mind think it's terrible, and then you fix it and you're like, oh, well, actually it wasn't that bad. But we had this property that we had listed, pre-sold, and the lady wired us the full $8,500 down payment on the property before we closed on it. Didn't want her to do that, but one of my team members sent the wire instructions and just did it same day. I'm like, typically we would just want to collect the holding deposit. We wouldn't want to collect the full down payment. It's a little much for us, a little too aggressive. And we were still like 3 weeks out from closing the property. Well, a week later, we get a call from the HOA. They're like, hey, there's a $13,000 HOA lien, but it wasn't listed anywhere. Super old school. This is actually in West Virginia, Cole. Super old school. It was like pen and paper. It was the most disorganized HOA. And so I reach out to the current owners. I'm like, hey, you guys haven't paid a single HOA due for the last 13 years that you've owned the property. Do you know about this? They're like, we didn't even know there is an HOA. I'm like, you're kidding me. And they're like, we're going to sue them. I'm like, well, it doesn't work like that. Like you own the HOA. You can't just rebuttal and say, I'm not going to pay. It doesn't matter. Like you own a property there. You're liable for the expenses. They're like, no, we're going to sue them. And they didn't get a lawyer. One of the ladies ended up getting sick. They dragged out the closing another 2 months. And I've got this new buyer who placed a down payment who goes and starts building a structure on the property. So then I get the calling me saying, hey, there's $13,000 in liens. The shanty tent structure on the property. I don't know. So then I call the new buyer, and they're like, "Oh yeah, we're in New York City. We're not coming out there anytime soon." I'm like, "No, you got to go clean up the shit on the property." So, long story short, I ended up having to cancel the contract with the 2 ladies because they were so far out to lunch and had no idea how to remedy the situation. I actually negotiated the HOA down from $13,000 to like $7,000. And then I even said, I'll split that with you because the deal was good enough. I'll split those costs with you. And they're like, no, we're going to sue them. I'm like, you guys are idiots. So I canceled the contract, then got in touch with the seller, refunded them the money. They were actually super grateful because they're like, oh yeah, we actually realized we couldn't afford it. And then I remedied things with the HOA. I'm like, you guys can clean up the shit. I'm so sorry about it. They're like, no, you were so great to work with. Well, if you ever want to buy another property from us, just let us know. So it all worked out in the long run. But situations like that, it took an additional 15 hours of my time last month, and I'm like, was not worth it. So I am very mindful about how far you want to take that process. And that was the one time where it went wrong, and it typically only goes wrong on the side of the new buyers. If the sellers were aware that we had listed it, they had no qualms with it. So rarely do the sellers gripe because they're usually expectations are set from the jump. That's what they've done their due diligence on you. They know your business model. They know what you're about. They've talked to you. But it usually can go wrong with new buyers. And so for us, we just set limitations there. Like, no, you can't buy it. You can't wire us money. You can't put the down payment. You can only put the holding deposit. So I would recommend just being cautious on that front. But no, we don't disclose that to the current owners.
Got it.
Yeah.
I have a question unrelated to that. It's on the advertising side.
Yeah.
Are you still using Facebook? And if so, do you use any boosted or paid advertising, or do you just do straight up marketplace?
Dude, such a good question, because we've got one gentleman in this room who's a Facebook fiend, and he'll give you his. Actually, we got two. Sorry, Michael, Rylan, and Michael. So they'll give you their rundown. I'll kind of tell you my experience with Facebook. So
Okay.
we were Facebook heavy in the beginning. That probably made up 80-90% of our sales. We were doing really low ticket stuff, and so it made a little more sense. Once we went up market, we tried it again this year. We did like a 6 or 7 month experiment. We had like 30 Facebook accounts. We were buying Facebook accounts because quickly my personal one got banned. My ex-girlfriend's account got banned. Like every account was eventually getting banned. So I was not able to go fully down the rabbit hole of boosted or paid posts.
Okay.
But there's another strategy that we'll touch on here in a second that relates to Facebook. I did create a new account. You have to season it for 6 months. So it's not seasoned yet to where I can go use the marketplace or advertise on it. So we might reintroduce it through paid postings. Now the strategy for Facebook is, Facebook Marketplace, Facebook groups. It's doing as much quantity as possible and getting as many listings out there. That for us, I quickly realized, because I had an employee just managing that, was as expensive as land.com. And the results were piss poor in comparison. We might sell 1 or 2 properties a month on Facebook, and we're spending the same amount. Or on land.com, we'll sell 10, 12, 15. And on top of that, we're aggregating a list of leads that might not buy from us, but are really high quality buyers that we can remarket to in the future. What we found on Facebook is like the quantity was high, the quality was super low. So to get enough listings out there, to talk to all of them, to qualify and to sort through those leads took so much manpower that it just wasn't justifiable.
Yeah.
That's what we've experienced. Now, one of the things that we just introduced on our website is an opt-in for cookies. So now people are opting in and giving us their cookies. And what we're going to begin doing from there is remarketing through like the Facebook Pixel. So if they came to the 40 acre in Apache County, they go to another website, they're going to see our ad for that same 40 acre in Apache County. So we are going to remarket people, and we are going to use Facebook for that. So that's kind of like a totally separate approach than how most people use Facebook. Can't tell you if it's going to be good or if it's going to be terrible. Like I've talked about throughout the course, though, that's like my favorite thing to do is to use my business as a canvas to experiment on. And then ultimately take those findings and integrate it into the course, and the stuff that works, we'll talk about it. Stuff that doesn't work, we won't even dive into it. So I'll report back on that later. But Rylan and Michael both are Facebook heavy, so I'll let them tell you their experience.
Rylan, what you got?
I've sold like most of my stuff on there, but I've realized anything over 30 grand is just not worth it because you're going to get way too many leads. But what I was doing was I was posting on the marketplace, and I would post like twice a week on the marketplace, and I just keep those listings running, list them to all the buy sell groups, and then I would individually go into public groups and post the link in the discussion with like a different description every time, so that they can click on that link and go see the marketplace listing. And I noticed I got a lot of leads from that. So just going in and posting in the discussion, and then you can like see how many views you got on it from those discussion posts. So it was very interesting. Like one time I posted it in a hunting group, and I got like 6,000 views in a week or something. And it was just insane.
That's interesting. Okay, cool. I never thought about that. Oh, interesting. Okay. I don't know if you want to just talk about yours, Michael, but I know about yours because I talk to you every day.
Yeah, I know. I used to post a marketplace. Ryan, I don't know if you do this. I used to post across the country. Like if I was listing a lot in Castilla County, I would put it in like New York and like every other state imaginable. I've stopped doing that because similar to Sumner, we hired somebody to run the Facebook accounts. We had like 35, 40 or something like that, and they were just like terrible leads. They've all got banned. We're down to like 9 accounts. I don't even really pay attention to them. What does work is on my personal, actually not my account because mine's banned, but my wife's account. Like if we're posting a lot in Maricopa, I'll just post in like the 3 closest cities. So like if we're listing a lot in Maricopa, I'll list in Phoenix, Scottsdale, and Glendale, and that does really well. That does super, super well. But what I found is like every post is different. Like I might post one and I'll get like 1 lead, and then I might post another city and I'll get like 65, 70 leads. It's just like Facebook has like a weird algorithm where they're like puts your post to the top of the marketplace or not. There's really no like dictating that. So I've stopped. Long story short, I've stopped posting out of state in like random cities and states. I only post in like nearby cities, and I'll put like 3 posts out there and that's it, and I'll just relist them. That does really well. And there's certain cities that do really well, like Pahrump. We buy land in Pahrump. I sell those on Facebook all day long. But a lot like, I don't know, in Oregon, I haven't yet to get any good leads on Facebook. So I think it's just like very city specific.
Yeah, that's a great point. It's exactly what I experienced too. Is it is such a local game. Some areas work fantastic, some don't. I just prefer paying for paid traffic. I just think you get a better return. So that's been my 2 cents on it. But when you're starting out working with a limited budget, it's like sometimes that's all you can do.
Yeah, it fascinates me that just Facebook in general, and I'm just wondering if there's like a better way to be doing it, because I know that people now it's like it's grown to Instagram and TikTok and whatnot, but people have built straight up companies just to advertise on Facebook. And if you think of your land business as a grocery store, like you talk about Sumner or whatever, and you just have this stock, there are buyers out there for this land. It's just how do you reach them effectively? And Facebook is like the most efficient marketing machine in the world. It's just like, how do you leverage it the right way? And I'm not sure I found that yet. I guess
so this is
there's like got to be a way to tap into the correct way to do it.
I think there is. But the way we look at everything in our business, and really any business for that matter, is a funnel, right? And so one of the things that I had a gripe with about Facebook is there's no way they can stumble down your funnel. There's no way they can build rapport with you without you having to be there. And what I mean by that is if we go land.com, landflip, any of those listing websites, they can go look at our full suite of inventory on that website. They can also go and find our website because it's listed everywhere through there. Go look at who we are, go watch our YouTube videos. They can be building a ton of rapport in the background without us even doing anything. And so when they come and speak to my team, they're like, oh my God, I feel like I know Sumner. Right? Like, is the land pioneer there? Can I talk to him? Like, there's already been so much goodwill and rapport built up, where on Facebook, no one trusted us. No one knew who we were from fucking Adam. Like, we were just some random person listing on there, and there was no way for them to stumble down and kind of digest the rest of our content. And that's the thing that I really didn't like about it. Now, the counterpoint to that, though, is you could use, like, I agree, Chris. I think Facebook is there are businesses that are just solely rely on Facebook, but there's hardly any businesses that solely rely on boosted posts. Most businesses that rely on Facebook use straight Facebook ads. Now, what you could do is build Facebook ads and then kind of bring them through a funnel, and that could work. But when I look at the complexity and the cost, I'm like, God, it's really hard to beat these other platforms that have already aggregated a list of motivated land buyers. Because how do I suss out the characteristics that make someone a motivated land buyer on Facebook? Like, what, you like Realtree camo, you shop at Big Five. It's like, how do I know how to target that person? Where on pin.com, I could pay for traffic and I know they've already been pre-vetted and they have a real opportunity to fall down my funnel. And so that was the biggest bottleneck that we saw on Facebook, was not that we weren't generating leads, but it was the cost to put up enough listings to get leads. But really the bulk of the cost came from my team having to go and build rapport with these strangers. I would rather let my brand do that heavy lifting. And then once they come to us, they're very warm and motivated.
Makes sense.
Yeah. So to answer your question, I think there is a way to do it. I just have not figured it out fully. And it probably requires a lot of doing a pretty big deep dive on it.
No, but what you said made sense though. Like you're leveraging sites that have already pretty much created the funnel for you, right? They've already decided these are the people looking for land, which also have Facebook, Facebooks and are looking through there, but you're taking an extra step to actually look at a land specific site, so then you already know they're qualified. So yeah, you're totally right.
Yeah, and you got to think about it like it's the difference between like intent based marketing versus like interruption marketing. Like someone has search land for sale in Costilla County. There's a lot of intent there. Someone was looking for a stroller for their newborn daughter and then saw a listing for a property in Costilla. They might be interested, but it's way different where they're at in that life cycle or that like funnel for buying land.
Totally.
So I just say make it as easy on yourself as possible. It's one of those things like you don't need to reinvent the wheel. I do think though, like if you've built such a dominant force in the world of land, what I would do is just have straight basic brand advertising. So I would just run paid ads that just say, come to the Land Pioneer, we sell land. It would not be property specific. And then they would come and kind of get indoctrinated in who we are. I wouldn't do that when first starting out, but like I think to do property specific listings, it's a little bit tough. The other thing too that I found on Facebook is it really makes sense, kind of like Land Flip, for those impulse purchases. But for the bigger deals, kind of like Rylan was talking about, 30K and above, they do happen. It's just like a needle in a haystack. It seems way more difficult. So that's my 2 cents on Facebook. But I think if you're going after the right property type, it can make a little more sense.
Sure.
Yeah. Cool, guys. Any additional questions before we head on out?
I don't think so.
That was really helpful. Thanks, man.
Easy. Yeah, I appreciate you guys
Thank you.
stopping by us. That was fun. Good seeing all of you guys. And if anything crops up, we'll see you guys next week and we can just discuss it there.
All right. Thanks,
Awesome.
guys.
Wait,
Good.
Bye.
see you guys.